Tired of watching your cash vanish in that market? Fed up with those losing trades and missed chances? Well, you're in luck. I've got an awesome strategy that can turn things around for you. Picture this, doubling your money in only 3 months with gold trading. Making big bucks with a 70% win rate on Bitcoin, or crushing it in Forex with a sweet 72% win rate. And it's not just wishful thinking. This strategy has been put to the test on historical data for gold, Bitcoin, and Forex. You won't believe the results, but don't just take my words for it. Get ready to see the proof with your own eyes. We're about to jump into the charts and reveal the magic behind this powerful strategy. Alright, let's get started. First, open up your TradingView chart. You should see a section labeled Indicators at the top of the platform. Click on that. This will open a new window. In the search bar, type Linear Regression Channel. You'll see a list of indicators. Select the Linear Regression Channel indicator and click on it. This will add the indicator to your chart. So, you might be wondering what the Linear Regression Channel indicator is all about. Well, let me break it down for you. The Linear Regression Channel indicator is a trader's secret weapon on TradingView, helping you monitor price movement and spot potential trend changes. Here's how it works, it's magic. When prices are above the channel bands, traders usually call it a bullish market. That's when prices are climbing and things are looking up. But if price candles linger below the channel bands, that's what we call a bearish market, essentially a downward trend. This nifty tool also shows you the direction of trends, making it a handy sidekick in trading world. But before we dive into using this strategy, we need to tweak a couple of settings in the indicator window. It's super easy, just follow along. First, head over to the Inputs tab. We're going to adjust the length setting to 100. This will smooth out the lines on the chart, giving us a clearer picture of the trend. Next, let's tweak the deviation linear regression bands to 1.7. This will widen the bands, making it easier to spot potential reversals and trend continuations. Once we make these adjustments, we're ready to start using the linear regression channel indicator to our advantage. Although we've got our linear regression channel indicator all set, we'll still need to figure out the best way to enter trades. Don't worry, I've got your back. But first, if you want to access a treasure trove of awesome trading tips and strategies, smash that red subscribe button right below this video. It's totally free and you won't regret it. Okay, now let's talk entry strategy. While our trusty indicator helps us spot trends, we need a solid plan for diving into trades at the right price and in the right direction. So let's break it down and find the perfect approach for you to start racking those profits. Next up in our strategy is the pivot high-low entry indicator, which helps us pinpoint the perfect entry levels for trades. To add this handy tool, let's go back to the indicators section and type in pivot high-low. Once you find it in the results list, give it a click and add it to your chart. This powerful indicator shows us crucial levels like higher highs, higher lows, and lower highs. But before we dive in, let's fine-tune the settings to make our analysis a breeze. Head to the settings window and in the inputs tab, change the pivot point period to 9. to keep our chart clear and easy to read, enable show pivot points labels and disable the rest. Trust me, your trading experience will be much smoother this way. Now that our pivot's high-low entry indicator is set up, let's explore how to make the most out of it and start making smart profitable trades. So we've got our uptrend identified. Price is highly sitting above that linear regression channel. Now let's talk about the exciting part, finding those juicy entry points. We're on the lookout for a higher high. This is where the price swings up to a new peak. Once we spot it, we draw a horizontal line across the chart. This line marks our potential entry point. When the price breaks above this line, it's like a green flag waving, signaling a bullish breakout. That's our cue to jump in and buy. Now let's discuss risk management. For our stop loss, we've got a couple of solid options. We can either place it below the most recent swing low, or we can use one of the bands of the channel. Both are reliable choices to protect our investment. And when it comes to setting a take profit target, we want a healthy risk to reward ratio. We're aiming for 1 to 1.5 ratio. This means our potential profit is 1.5 times our potential losses. And for sell trade, we look for the opposite. We want to see price below the channel, a lower low and a break below a horizontal line drawn at the lower low. This signals a bearish breakout and we can enter a sell position. Our stop loss would be above the recent swing high or one of the channel bands, and our take profit would be 1 to 1.5 risk to reward ratio.